Welcome back to another weekly analysis video. This analysis is for the week of January 11th, 2026. We'll start off with a review of last week's price action. Well, technically we're still in the current week since it's Friday afternoon at around 12:20 p.m. We'll start off with a review and then move into the analysis for what I believe will happen next week. So I was looking for bearish prices this week in the Nasdaq because we had broken down here and we had a neutralized day in this area in here. Now, we had absolutely no bearishness. And if you recall in my analysis, this was a line in the sand for me. This area in here, the stop run area above 25,515, was a line in the sand for me. On Monday, we actually traded into that, came off of it. So going into Tuesday, I was looking for bullish prices and looking for reasons as to, can this be a bullish week? And it was. We'll get into the lower time frames as to what happened in here and the setup that formed on that Tuesday and Wednesday as well. Okay. Notice how here on Thursday, which was yesterday, it used that area as support, and we have rallied away since. Okay. Today being Friday, we still have not met the close of the day. Again, it's about 12:20 p.m. on Friday afternoon, January 9th. Okay. So we did not have a bearish week. I went into the week with a neutral, for the most part, a neutral bias with a slight bearish undertone, understanding that had it went up into this area in here, went through it, started finding support in there, that I would then reverse my bias into a bullish one. And that's what we did. And we'll get into that later into the review on the lower time frames. All right, now on to our hourly chart here. We have the open here, 1800 Sunday, January 4th. Notice the immediate slow rally through 25,515 into the stop run area above 25,515. And again, this is its relative stop run area above this level. This is a stop run area keying off this level in here, 25,515. We came into that stop run area, came off of it, went back into it, came off of that high again, the premium of that stop run area, swept it again, and then notice this large bullish candle at 9 a.m. This was the 9:30 open, went right through it into 25,758. Notice how it dropped down in here, found support. This is your setup right in here. When it drops down into here and you start seeing the reactions that you want to see for bullish signatures, this is where you enter. We had a nice lunch session going into the afternoon session. Okay, that was the setup for Tuesday, and we may later in this review and perhaps in the analysis go into a lower time frame, like a 1 minute or 5 minute chart, and we can see the breaks in market structure and then capitalize on the lower time frame for a position. Okay, but this was a setup for Tuesday in here. This is when it all changed for me. Breaking through this area in here, I was already wanting to switch my bias on the close of Monday, going into Monday morning, really, to be honest. This confirmed it right in here. Price comes back down into that. Little bit of a deeper retracement that I'd like to see, to be honest, closing in the entire gap that it had created. But notice how even though it closed in all the way, it rallied away from it and got away from it immediately. And that's what you want to see. That's a signature that you want to see. That's good. Okay. So that's what occurred on Tuesday. Alright, so on to our 15-minute chart here. I want to draw your attention into this area in here. So once we trade through the stop run area relative to the 25,515 level, we trade through it and we start entering a new dealing range, which is 25,758 to 26,001. Okay, this was the close in here on Tuesday, and the open going into Wednesday. We drop down, we're in this dealing range. Notice how it finds support at its relative stop run area, or rather the start of the stop run area of 25,758. We find support, rally through it, find support on 25,758, rally away into the top, the beginning portion of the stop run area above 25,758. And then on the open at 9:30 in the morning Eastern Standard Time on Wednesday, January 7th, we start to rally. Okay, now on the lower time frames in here, which again, I'm going to try and incorporate that into the review for this week. So diving into the lower time frames and looking at how structure forms there and seeing how to position yourself. We see in here we start to break through, and then on the lower time frame we actually come back down through it, and then we rally up. Okay, and there's also a setup in here where it actually finds support in the equilibrium of the stop run area relative to 25,758, but you can't see it on the 15-minute chart because it's too large of a time frame. You can't see it in here, but on the 1-minute chart you can see that equilibrium price point was tapped and it shot away into the equilibrium point of this dealing range in here and into a premium. Okay, came into a premium into the afternoon session and then came off of it. Okay, so we had an afternoon reversal for Wednesday, but the morning bullish session is what I'm focusing on for Wednesday. Okay, now before we dive into the lower time frames, if we are to do that, I want to emphasize that notice how I was wrong in the beginning of the week. I was actually looking for bearish prices, if you recall. I had a neutral bias with a slight bearish undertone. Okay, I was wrong. I knew I was wrong going into Monday. Okay, and so I waited to see what was going to happen, and I got confirmation that it's going higher. So I negated whatever loss I may have taken earlier in the week by simply reversing the idea and not trying to force anything. And that's the takeaway I want you to have for this week. Is a lot of times if you reverse your bias, you see that you're wrong initially. Just reversing your bias and going the other way a lot of times will resolve a lot of your issues. Okay? So, know when to be flexible. Know when to see what the market is telling you, and that your current bias that you have right now is probably wrong, and based on the signatures that the market is showing you, you may want to go the other way. And that's exactly what happened this week with myself. Is I was wrong initially, but I reversed the bias, and it turned out to be a great week. Okay? So that's the key takeaway for this week. So let's go ahead and move on to the lower time frames and then move on into the weekly analysis for the week of January 11th, 2026. Alright, so now we're going to look at the lower time frames and the setups that formed on Tuesday and Wednesday of last week. Okay? So I want to draw your attention in this area, which was around 11:30 in the morning on Tuesday, January 6th. This is when price broke out. It broke out on Tuesday, January 6th at around the 9:30 open, a little bit thereafter. A little bit after the 9:30 open, it broke out. Came up to 25,758, just fell short of its stop run area, above that level. And then notice the drop down. Last week in the analysis, I had said that if we break through this area and then we start dropping down, which is what we did here, and we start seeing support signatures, meaning price being supported off this area in here, the stop run area, which is keying off of the 25,515 level, the stop run area being between here and there, we start seeing support, it's going to rally higher. And that's exactly what we did. We found support off this level, consolidated around it, broke away. Now, where you could have got in, okay, there's a couple of ways of doing this. as it drops down into this level, you could be buying in the stop run area below the blue line here, which is 18 points total below that level there. You could be buying in there and then waiting throughout all this, or you wait for a reaction through the upper stop run area, come back down. We get that here. Okay? So you would have held on to this trade from around 11:25 through when it finally broke out to 12:06. Okay, so you had to sit through the trade for about 41 minutes before we finally started to move out. You could also anticipate the consolidation. Notice the consolidation. Maybe you entered a position, get out of it, wait for the move out of that consolidation, which we have here. Move into the stop run area relative to this level here, the 25,758. Notice how it uses it at support. That's another entry right there. And then the rally higher. There are many different entry techniques that you can use to get into a position. But you see how everything is working. Okay? You see how price moves through these stop run areas, comes back down and touches them. Even though it consolidated and kind of meandered around those areas, it still nonetheless moved higher and found support in this area. Now, the only issue with this is the time of year. Okay? The time of year, which is the beginning of the year, beginning of January, you see crap like this. This usually doesn't happen. Usually price is pretty quick to move away from areas like this and expand to your objectives quickly in normal times, normal price action. This week was a little sloppy. Okay? So it's not exactly the most normal type of price action, so you have to be aware of that. Nonetheless, there are still setups, and you can use these lower time frames to really hone in on some nice setups and be able to meet your objective for the week. Alright, so now let's go ahead and discuss the setup for Wednesday, January 7th, 2026, and then we'll move on into the weekly analysis for the upcoming week. So as I've been discussing, price came through, and went through rather, this area in here, came back, touched it, rallied away, and entered a new dealing range. The dealing range was 25,758 to 26,001. Okay, that was the dealing range that it is starting to work within once it breaks through this area and into here. Okay, so during this time period, when it enters that dealing range, we're working in that dealing range from this point forward. So around 1:30 in the afternoon on Tuesday, January 6th, we're working within that dealing range. Price rallies up, goes into the close, and after we reopen going into Wednesday's trading, price trades back down into that discount of this dealing range, 25,758, comes to the stop run area, or beginning of the stop run area, below that level, rallies up and through it. Okay, that's important. Notice how it comes back down, uses it as support again. And then here's the real takeaway. Once we start really expanding in here, okay, notice how price starts to move aggressively through this area in here. That is our sign that price wants to seek a premium, higher prices. Now look carefully in here on this 1 minute chart. Each candle is 1 minute. Okay, that means 60 seconds of time. So 1 minute, 1 minute, 1 minute. Notice how at 9:36 we start dropping down. We started expanding at 9:32 in the morning, Wednesday, January 7th. We start dropping down, and notice how it touches the middle of this stop run area relative to the 25,758 level. These stop run areas below and above will be used support turn resistance, resistance turn support, so on and so forth. They are very crucial and show you key structure breaks and things of that nature, and where price wants to go if we're moving through them, and if we're using them as support, resistance, etc. Okay? The Nasdaq is telling us what it wants to do. It seeks that equilibrium price point of this stop run area and then rallies away. Okay, this was the setup for me in here. Okay? Reaching up into a premium within this area in here, which is the equilibrium area and portion of the dealing range we're working in, which again is 25,758 to 26,001. Okay, it enters a premium, retraces back. Notice how it only goes to the stop run area above 25,758. Did not go back to 25,758 or lower. If it starts doing that, it may be going the other direction. But it uses this area as support yet again. This was just a very micro setup. You could have waited for this. You got a rally. You would have sat through a little bit of a consolidation and retracement. Nonetheless, we did get higher prices yet again, taking out this high here. Okay, and if you held on to the trade a little longer, perhaps a small portion, I personally would have taken a good chunk of the position off in this area in here. So it maybe had something held on, a small portion of the position held on for later in the day going into the afternoon session. The afternoon session, we had an afternoon reversal. Now I won't discuss any of that because it's not something I would have been a participant in. So I'm only discussing things that I personally would have participated in or did participate in. Okay? So that's that. So that was the trade for Wednesday. Okay? Now going into as we progress further into 2026, into this year, I'm going to be going into great detail on all sorts of setups, how to work around these levels, everything. So you'll see that all this year. I am developing a scheduled video plan as to how I want to roll out teachings and things of that nature, and then eventually further, like later down the year, like maybe fourth quarter of this year, roll out a book that I want to write on trading and then distribute that. So we'll see. Anyhow, let's go ahead and move on into the weekly analysis for the upcoming week. Alright, now we're back on our daily chart here for the weekly analysis for the week of January 11th, 2026. I want to draw your attention right here where this green box is. I do believe price is going to seek these highs right up here. That's going to be around 26,115. And the reason I think that is because I had a bearish bias last week. Price did not even bother to go lower at all. It went through this neutralization day here, found support right in here. Remember how last week I said if we start finding support in this area in here, it's going to seek a more bullish tone, and that's exactly what happened. So I'm seeing continuation of that going into next week. Okay. Now we do have to gauge how we behave at 26,001. Okay. Ideally, price stays above 25,839, but it cannot go below, meaning a close below 25,758. If we start getting below 25,758 and start finding ground through there, I'm going to go ahead and negate the bullish tone that I'm currently seeing. Okay. Given that it is the beginning of the year, I still have a neutral bias, but going into this upcoming week, I'm going to be looking for reasons to get into long positions and be bullish. So that's that. Let's go ahead and move on into the hourly chart. Alright, onto the hourly chart now. We see a more refined view compared to that of the daily chart. And I want to draw your attention to the current price of the Nasdaq. Notice how it's above the equilibrium portion of this overall dealing range in here. Ideally, it stays above 25,839, and given the current structure of this price leg here, it should do that with a neutralization. Neutralization candles, by the way, are not only applicable to the daily chart, but they're applicable to all time frames. Price has a lot of business to get through on the downside. So because it has a lot of barriers to get through on the downside, I don't foresee it going lower. I see it staying firm and propelling higher. Now that could all change. We have to wait for the open and just proceed with caution, as it is, again, the beginning of the year. And signatures that usually would hold tend to not hold. So that is something that's in the back of my mind. But I'm looking for bullish prices. Okay? 25,839 is ideally where I'd like to see price stop if it drifts lower. Going no lower than 25,758. This area in pricing here must hold if it comes back down. So it's just something that we have to weigh out, and how the market behaves going into the open on Sunday, going into Monday. That will give me some insight as to what it will be doing for the rest of the week. Okay, so let's go ahead and move on into the 15-minute chart and conclude this analysis. Alright, on to our 15-minute chart here. Let's go ahead and zoom in, and you will see how high resistance this has been. The stair-stepping type of price action that we're seeing. So down, up, down, up, down, up. This is usually very hard for price to get through when you have these types of formations. Price takes a lot to get through that. It usually requires a high-impact news event or something of that nature. Okay? Volatility is what it requires. Okay? So that is one reason I have a bullish tone for the upcoming week. And more importantly, if you recall, we got through this area. Remember on Tuesday how we expanded out of that stop run area. And we came back down in here. On Thursday, found support. But before that, we came through it here, meandered around it, through it again, came back down, found more support. So bullish signatures all around for the Nasdaq right now, finding support in areas where it should and rallying away accordingly. Okay, and this is what you have to gauge as a trader. And overall, is price showing bullish signatures or bearish signatures? Are we in a premium or a discount? And these are things that I will be discussing going into 2026, later in the year, where I go into as much detail as possible and eventually rolling out my book, which will not only discuss the price aspects of everything, but it will also discuss the time aspects, which I haven't even discussed yet. I haven't even scratched the surface for everything that I know. Okay? This is just surface level. And surface level is good enough for, a lot of people. Okay, but I'm going to eventually give it all away. Everything that I know will be public information. So with that being said, that's going to conclude the weekly analysis for the week of December 11th, 2026. As always, take care, and God bless.